All right.
you.
Good evening, guys. Welcome to another episode of our lecture. I really apologize for what happened yesterday. I wasn't able to meet up for yesterday class due to the foreseen circumstances. But even such things could have occurred today, but I said no, I really need to be in the class today because you guys are really missing a lot and time is not on our side. All right. So who could remember maybe where we stopped? I think we stopped at ascending and descending triangle. Well, were we able to finish ascending and descending triangle the last time? Who could remember me, please? Who can remind me? Were we?
I think we were there on that ascending triangle, if I'm not mistaken.
I think we finished ascending and descending triangle. I think and on the descending triangle, the resistance is downward sloping. What the support is horizontal. All right. We actually give a light structural example of what I'm going to discuss on flag patterns that frequently form on our chart, which we use to identify where to buy and when to sell. So I think we have two major flag pattern, which is the bull flag bullish entry orientation, where the bear flag pattern is used to identify when to sell, or a bearish entry, or a bearish continuation. So before that, let's just start with the blue flag trading pattern. The definition says a blue flag is the price action within a context of an uptrend. An orderly price decline consisting of a narrow trend range, comprises of lower swings / pivot highs and lower swings / pivot low. So what are they saying? They said a bull flag is a price action within a context of an uptrend. You see, that's why I say it is used. It is used for a bull continuation or a bull entry or a bullish market. You use to identify when the market is still bullish. So it's always appear within a context of an uptrend. And I also said it was an orderly price decline consisting of a narrow trend range. It means that when the market was going up, a blue flag will form when there is something like a downward channel. It appears like a channel that is going down, and when the resistance is broken, that is when the blue flag is confirmed. All right. So they said the success of a blue flag can be greater after a significant upside move due to the possible increase of underlying support. Blue flag can be stronger when the swing highs that begins the pattern is also on all-time high due to the possible lack of future variance, blah, blah, blah. So this is what I'm trying to say. This is the example they gave you. They say a blue flag appears in the context of an uptrend, which means the market must be what? An uptrend first before it starts creating an order decline that looks like a narrow downtrend. All right. You know, when you see this, normally you say it's a downtrend, but it's a narrow one. The narrow one will occur afterwards an uptrend. A narrow channel will what? A downward channel will what? Produce. In which that once this resistance is broken, a blue flag is what? Confirmed. Do you understand? So this is just, the structure is very, very simple. It occurs in the structure of what? An uptrend. The main trend is what? Uptrend. But at a certain point, it started creating what? An order decline. an orderly what? Decline. In the sense that when you connect your trend line, the structure you are seeing looks like what? A downtrend channel. But probably what is in what a short time. It's not actually a pure downtrend channel. It's in a short time. And you can only confirm this afterwards the resistance is what? Broken. Because if the resistance is not broken, you can swing back again to test what? The support again. But when the resistance is what? Broken, it means that the market is now ready to what? To move. This is why you see a flat move. It's just once it breaks out, it can retest or can just what? Move, continue moving. So a bull flag is one of the simplest patterns to learn. Yes, flag patterns are one of the simplest patterns to learn. It's very easy to identify because you can easily identify a channel. So you now look at was it a downtrend before or was it what an uptrend before? So if it was an uptrend before, definitely it was a blue flag. So all you just need to wait is what sit tight and trade the breakout or buy the support. That I'm talking about here. I'm talking about here. You buy the support in form of you are swinging the trend. That's what we call swing trend. Why all this time the market will bouncing between the support and resistance, you keep buying and selling those swings. So when the market wants to reverse, you buy here and you sell immediately at this resistance. You don't have to go for it to break because you're not yet sure whether it will break. And it's only when it breaks that you can call it a bull flag. Are you guys getting it? Any questions so far? Any questions? All right. Still no question. So let's kind of look for a large chart example of what they are trying to say here. You can look at this. This was what? An uptrend before. Now let's start creating what? An orderly price decline. That when you connect your trend line, it look what? Like a downward channel. But definitely, what are you expecting? For it to break out from this resistance, and that's when you can call it a bull flag. And also in the meantime, since you have connected your support with at least two lows, that means you expected that whenever price touch at that trend line, you expected that price to bounce back. So that's why I said you can buy at the support. That after two touch, after there has been at least two lows which connect your trend line. So maybe if you come to the third time and it shows a sign of rejection that is not going to break, you can just buy it as a swing trade. You sell at the resistance, but that's when you can, jump into the trade or it doesn't actually occur 100% because of the fundamentals surrounding the market might be too high. All right. Now, if you want to measure your take profit, bull flag always has a very good risk reward ratio. What I mean is that TP is bigger than a TP of this thing of a triangle pattern. You understand? Because you measure your TP based on where the trend started. For example, look at this uptrend started from here. That's where it started going up, up, up. So you have to measure it. Then, so anywhere it's reach is where you can call your TP. And also remember, it doesn't mean that you should put it at exact where that is reach. You can put it before they reach. So you be sure that at least it has high probability of clicking. Because most times you see that only small thing will make your TP not easy. And by the time you might notice, the market has reversed on you. So you should not try to keep it in an exact, rather keep it in a kind of a price range. You understand? Okay. So in the meantime, we can try to Identify this blue flag on our trading view. All right. These are one of the simplest patterns again. Also make sure you're making your jotting. This and that. All right. Let's see if we can find a blue flag here. Please give me sorry. Let me wait to 1 hour. Let me look for another chart. Let me check this GMT. The GMT is supposed to have a blue flag. GMT is just riding like hell, like no man's business. It's even about to retrace self. If you get married, you can short GMT if you have the mind. After some few rejection, close with the first bearish candle and continuation. So kind of going to drop a little, but not much. But be careful. The FA is very solid. So move like a scarce again. Okay. This particular one you're seeing here. This one is a bear flag. You can see when I analyze it, draw the movement, and it was able to what reach it. So you can see, they can only see it on my chart. So this passed on GMT. When I wanted to short GMT, I identify a bear flag pattern, measured my TP, and you can see it was hit before any possible what reversal. But in the meantime, we are looking for blue flag. Let me see if I already found one. Yeah, this is kind of what a blue flag, though it's tiny, but I'm going to try to move to a lower time frame to more clear. All right, all right. This now is also what an example of what a blue flag. This is what an example of of what? A bull flag. When you look at this, you can see that this this was an uptrend from here. Do you understand? Then reach at this point, start making an orderly decline. It break out, it retest and what continuation. Now there's something I want to check first. I want to like measure this our TP based on the way we measure our TP and know whether it actually reach. Let's measure it. We use our trend line. We measure from here. Measure from here to here. All right. Then we're gonna clone it. Then we'll move it from here to here. All right. They have it in chat. Now, what do you see happen? Even though that it started ranging without hitting the final TP, but at least you can see the long movement that we are able to achieve. This is why I told you that bull flag used to have long TP than you can see how much long this TP. Let me just measure the TP. Let me check how many percent it is. This is about 200%. This TP, this our TP is like what? About 200% profit on spot. You can actually see it here if you can see it very clearly. This is it here. It is written there. Let me remove so you can see it clearly. %200. That's the profit of the TP of this word. This bull flag. In which that before you even reach here, you must what? Have taken your what profit already, like taking some profit, boost some profit out. Let's try to reduce it to where it's reached before the range is started. And know how much profit we are able to achieve for the ranging. Okay, let's say it's about 140% profit on this particular what bull flag by just measuring the what how to use our TP. You see that? So bull flag always use this long as more profitable, like giving you more longer TP prediction than a triangle. Triangle is like a quick in and out, but bull flag can even hold you for days, like for you to see that TP correct, you know. So this is how you make use of your TP, how to make your entry, and how to make your what exit. So for me now, if I'm the one that is on this trade, my TP1 could be here. Let me show you something. My TP1 could be here at this measurement. Sorry. If I measure this resistance that is here, that's where I put my TP1. Then my TP2 can be after this rejection we did here. My TP3 can be after this rejection that did what here. So this is how you trade your method. Most times you might see you might have an empty chart where you cannot be able to see a support and resistance to make a TP. So what do? You use that measurement, then watch out what the candles are saying. When the candle form like a reversal pattern, reversal information, you will take your TP. Why did I say so? If you look at this, if you look at here, if you measure this, you know this is the only resistance you have TP1. Then if you look at here small, you see something like a double top. So once I see something like that, definitely I will just change some profit there. If you also look at here, you see something like a double top, double rejection. So this is how you can take a profit to you are tired of taking this profit and close that market. So that's what we have for bull flag. If you have a question, please ask your question before you move to the next. If you have a question, ask your question before we move to the next. I'm seeing kind of question here. Okay. Seems no question. Let's move to the next. All right. Next one we have on our list is a bear flag pattern. What is it? A bear flag is a price action within the context of a downtrend. Now, this simply means that the price must be in the context of a downtrend that produces an orderly price increase, which means that if it's facing an orderly price increase, that means the market is in a downtrend, but now started forming a channel that look like an uptrend channel. That say orderly price increase is ranging, but the price is increasing in nature, which will look like an upward channel. But that doesn't mean that it's an uptrend. But trend range comprises of a higher swing pivot size slash and a higher swing slash pivot lows, blah blah blah. So this is just what we're trying to say. I hope you guys can see my screen. Can you guys still see my screen?
Coach, your screen is visible.
You can see my screen, right?
Yes, and you are audible. Your screen is right and audible.
Okay.
Your network is perfect today.
So this. All right. This is exactly what I tried to say by a bear flag. They said it appears when the market is in a downtrend, but now start to create an orderly price increase consisting of a narrow channel. So it means that when the market was in a downtrend, now it started forming an orderly price increase when the market is ranging. When you say the market has entered ranging. But when you connect your trend line, you are seeing something like a channel that looks like an upward channel. But it's not actually an upward channel. It's something that is getting ready to create a bear flag. So this is where they say they will say this is a bull trap. Yes. When people see this channel, they'll be like the bull has started. Why? Definitely is a bull trap. If you're not able to find that early that was a bear flag, you end up losing your strength. Because normally when you see something like this, the market is going up. You be like, you are still in the uptrend channel, you are still in the bull time, you still bullish, you are expecting for it to be doing, and by the time you are having that in mind, you end up losing your money. But when you a bear flag, you set yourself in, you have to key in that mindset that all right, I'm expecting bearish to set in. And by that time, you'll be able to spot when that breakout is coming. I know bull flag, when they want to break out, they always break out with force. Most times the force that you cannot even be able to see it. So you must be ready. Have in mind that what you are going to see is a bear flag. All right. So this is simply how it looks like. So what do you expect? You're expected to short the resistance. You understand? You short the resistance after first and second. Though. The third one, if the third one should come, you can short it. All right, and take a profit at the support. Then after you break out, you short again. It's very, very simple. It's not like it's a hard. All you just need is under the class, go to your chart and try to identify these patterns. With time, you now start getting used to them. Let's look at a live chart example. This their live chart example is not clear. But it's kind of similar what they're trying to say, because you know, charts is not like exact. But this is the price of what information, news, and stuff like so. You're not expected to be seeing exact, but they're trying to tell you the kind of structure you're going to see. So based on with the example they are giving, the example is not kind of super clear, but it still explains what they are trying to say. When the market is what in a downtrend and start creating what an orderly price increase, and boom, it will break, it will test and what continue what falling. Very simple. I thank God we actually spotted a real life example on our GMT, which I think I traded weeks ago, which is still on my chart because this is my trading real account. All right, you can see very tiny. You see that normally when someone sees this, you would think that okay, the market has continued being uptrend. You understand? You're expecting it to be doing like this, continue going up. But me, when I actually saw the first low, first high, second high, third high, second low, I was like, man, this is going to what fall. And when I also see this, and I found that connecting my trend line made it look like what a bear flag. I set myself in. I measured the movement from year to year, and I measured it from year to what year. Color my TP what year. And if you look very clearly, you see that if at the price of my TP, that was a very good price rejection there. Before you even continue, you can see it here. You can see it here. To tell you that the way we measure our TP is quite super accurate. That at least before any possible reversal, let your TP be able to. Based on your choice, if you think that it's more bullish, but based on the structure we are seeing at that particular time, this information is kind of what giving us. And because a lot of traders are seeing the same information, that is why it's always aligned. Like most of the time, 80% of the time, 70% of the time, it's always aligned. Always find out the trend. If you look at all these price actions, you find out that these price actions are kind of using trends too. That's why they say that it will always be in the midst of what in the midst of what an uptrend or in the midst of what a downtrend. So trend is very necessary when you're trying to trade. Do you understand? All right. So this is a real life example. I'll show you how we check our TP. We measure from the distance between the flag where that downtrend started to what your first low. Then move the movement from your high to where it reach. Very simple. Any question? Any question, guys?
The class is so quiet.
Okay, seems no question. More pattern before we send. Let me check what is going on. No question. All right. The next pattern here is call it cup and handle trading pattern. Cup and handle trading pattern is formed after a pullback from a swing highs, blah blah blah. What this cup and handle pattern? This pattern hardly formed. You can hardly see this pattern. Yeah. If I want to look for it in the chart, you can hardly find it. But in the meantime, it's still what a bull flag. All right. Whenever you find a cup and handle pattern, you will definitely see what a bull flag. That handle is actually what a bull flag. This is what I mean. Look at this. If you look at this is actually what which you use to trade is what a bull flag. I know a bull flag is is in the context of an uptrend with an orderly price what decline and what a breakout. So instead of stressing yourself trying to see up and now start finding the handle, just look out for what a bull what flag. Simple. So most people will be setting themselves to understand up and handle, without knowing that since the handle is actually what a bull flag, you don't need to stress yourself trying to look for a cup in the chart. But whenever you see your bull flag, trade it as what a bull flag. The same way you trade a copper handle, in the same way you trade what a bull flag. Put your entry, put your what TP and exit. So it's very, very simple. You can see a live example. You can try to go through these materials on your own free time in order to get used to the terminologies used on the materials. Be able to use it to do your best. I say the best way you can also learn this is have your written notes, use them, move to your charts, try to identify these patterns on your own personal time. When you keep identifying them, the more you keep identifying how it keeps going. All right. So this is where we're going to draw line for the class tonight. As tomorrow we're going to treat one of the most important patterns, one of the most too, which is known what as the wage trading pattern. This you write something down because the name does not imply what the movement. So if you want to follow the name they gave it, you might end up what trading the wrong way. All right. So if there's any question, you can ask a question before we can conclude. My screen. All right, guys, any question? Please, I'm open for questions now. All right, there's no question. This guy will draw our life of today. You guys do have a blessed night.
Thank you, Coach. We'll see you tomorrow.
Okay.